Europe's loss is China's gain. That's what the equation looks like currently in the energy market. The continent suffered a seemingly irreparable setback at the hands of Russia. This was after Moscow cut off gas supplies in the aftermath of sanctions by the EU itself. And that was not all. The bloc also lost a key supplier in Moscow that provided 40% of Europe's energy requirement. Brussels thought that it would dry up Russia's revenue and consequently hamper its ability to sustain its war in Ukraine. But Russia was quick to realize the EU's move and started exploring alternative markets. Not only did Russia supply its oil to Asian nations like China and India, but did so at a lucrative price. The upward trajectory of Russian energy making its way to China keeps increasing. According to the latest data, purchases of natural gas, coal, crude oil, and oil products increased to nearly $60 billion since the invasion of Ukraine, from about $35 billion a year ago. Interestingly, what's striking is that imports from Russia are the only bright spot in Beijing's trade data. Oil imports from Russia rose 16% to 7.72 million tons last month, a volume breached only by Saudi Arabia. In fact, oil will be a commodity to watch out for as the West's new set of sanctions kicks in on December 5th. These sanctions aim at putting a price on Russian crude around the world. Now back to China. Russian LNG sales expanded by more than half from 2021 to 756,000 tons in October, despite a 34% decline in China's overall purchases of the fuel. On the coal front, imports from Russia increased 26% to 6.4 million tons. All of this is a lot of trade, mind you. Guess the total amount of Russian purchases by China. A whopping $7.7 billion in just 1 month, that is October. This is a slight increase than the $7.6 billion done in September. And this is not all. China is also reportedly rerouting Russian LNG and selling the excess back to Europe, which the latter is accepting gleefully, without realizing that it is shooting itself in the foot. You see, this is a convenient deal for both sides. China is getting these resources at a highly discounted price and wouldn't like to turn it down. For Moscow, this proves the point that EU can't stop Russia's coffers from filling up. If not for Europe, there will be other markets that will pick up these commodities, especially when offered at a cheaper rate. What also helps is the growing friendship between Chinese President Xi Jinping and Russian President Vladimir Putin. China so far has stayed away from calling out Vladimir Putin for his actions in Ukraine directly. This is what Russia would look like. Through such lucrative deals, it aims at keeping alternative markets open not only for revenues but also politically. This at a time when the West, led by the US and the EU, try to push Putin on the back foot. So do you think Russia's hunt for a successful